Have you ever wondered how ordinary people manage to build wealth over time, even without winning the lottery or launching a $1 million business? The answer often lies in something surprisingly simple: owning stocks. So, what exactly is a stock? At its core, a stock is ownership. When you buy a stock, you're not just tapping on a trading app, you're purchasing a piece of a company. And here's the key: the more shares you own, the larger your slice of the pie. Your profits grow in proportion to the capital you've invested. If a company distributes earnings through dividends, or if its market value rises, your gains will reflect the number of shares you hold. The greater your commitment, the greater your potential reward. Think of it this way. If you and three friends open a small coffee shop and you each own 25% of the business, your share of the profits will always match your stake. The same principle applies when you buy shares of Apple, Tesla, or a promising startup. The ownership is smaller, but the logic is exactly the same. But why do stocks even exist? Companies issue stocks to raise money. Instead of taking on debt, they invite investors, people like you and me, to provide capital in exchange for ownership. This gives the company resources to grow, while giving you the opportunity to participate in that growth. Now, let's talk about how stock prices really work. If you've ever opened a financial app, you've probably noticed that prices change every single day, sometimes every second. Why? In the short term, stock prices are influenced by supply and demand, news headlines, quarterly earnings, interest rate decisions, or even investor emotions. A rumor, a tweet, or a sudden shift in sentiment can send a stock up or down in minutes. It's like the waves of the ocean, constantly moving, often unpredictable. But here's the important part. In the long run, stock prices tend to reflect something deeper. Over years or decades, they are shaped by the company's real performance. Its profits, innovation, business model, and ability to grow sustainably. The daily noise fades away, and what remains is the fundamental value created by the business. That's why patient investors, who focus on long-term potential instead of short-term fluctuations, often achieve the best results. Here's the truth. Stocks can be incredibly rewarding, but they also carry risk. Prices can swing dramatically. The solution? Time and strategy. Historically, long-term investors who stayed the course have seen the market reward their patience. One of the biggest problems beginners face is confusion. They hear about dividends, indexes, volatility, and feel paralyzed. The solution is to start simple. Diversified funds, like index ETFs, allow you to own hundreds of stocks in one move, spreading your risk and giving you exposure to the broader economy. Another powerful strategy is consistency. Instead of trying to time the market, invest a fixed amount regularly. This approach, dollar cost averaging, smooths out the ups and downs and keeps your emotions under control. Because remember, in investing, your biggest enemy isn't the market, it's impatience. So, what are the main benefits of owning stocks? Growth potential, dividend income, and protection against inflation. Stocks have historically outperformed bonds, savings accounts, and even real estate. They allow you to benefit from human progress, new technologies, medical breakthroughs, and global innovation. Of course, there are risks, market downturns, company bankruptcies, and uncertainty. That's why diversification is essential. Think of your portfolio as a solid house, balanced, resilient, and built to withstand storms. Here's something powerful to remember. Stocks are not just numbers on a screen. They represent real businesses, real people, and real progress. When you invest, you're building wealth for yourself while helping to shape the future. The best part, you don't need a fortune to start. You just need discipline, patience, and a clear vision of your goals over the next 5, 10, or 20 years. So let me ask you, do you want to find out how to save more, invest better, and plan concrete goals? If you'd like to know more, subscribe to the channel and watch the next video. Kie